You are listening to The Vocal Technologist. Spoken Tech for your ears.
Welcome back. Today, we're looking at finance and, honestly, how fast everything's changing. It's wild.
It really is. From how you tap your phone to pay for coffee, all the way up to these huge institutional plays.
Exactly. So we've gathered insights from a few different places to sort of piece together where things are heading. For your money, and, well, everyone's money, think of it as a quick way to get up to speed. Okay, so let's start with Gen Z, because they really are, like, digital by default. Our sources show something pretty staggering.
Oh, yeah. What's that?
They log the equivalent of 425 digital activity days a month. It's this measure of just constant online interaction.
Wow. 425 days in a month. That's a lot.
Right. And it's not just scrolling. They're saving 36% of their income. That's way above average, about 10 points higher.
36%. That's impressive.
And they're 3 times more likely to use things like credit builder products. It's just a totally different way of thinking about finance, isn't it?
Absolutely. And you can see that reflected perfectly in the neobank boom.
Yeah.
These digital-only banks.
Like Monzo.
Exactly like Monzo. It just blew past 13 million users. And get this, their business clients doubled to 500,000.
Doubled.
Yeah. And it's fueled by features that just make sense for this digital life, you know. Easy joint accounts, smart budgeting tools, baked right in.
So it shows the power of actually designing for how people live now, digitally.
Precisely. For them, finance isn't some separate chore. It's just there, integrated.
Okay, so that leads us nicely into the whole data conversation, which is getting really interesting.
Open banking.
Yeah, MasterCard CEO is really pushing for open banking. Calls consumer-consented data sharing a, quote, winning proposition.
Which basically means letting you securely share your bank data with other apps to get maybe better deals or services.
Right, and MasterCard put their money where their mouth is back in 2020, buying Finicity.
A strategic move.
But it's not all smooth sailing. We've seen JP Morgan start to charge fintechs for accessing data.
Okay, so putting a price on it.
Yeah, and there was that rollback of a Biden-era rule that was meant to speed up mandated data sharing. So the regulatory side seems a bit uncertain.
And that raises a really important question. You know, what does this actually mean for regular people?
Right.
You see this tension with, say, buy now, pay later companies, Klarna Afterpay. They're actually holding back on sharing most user data with credit bureaus.
Why is that?
Well, they're worried it could unfairly drag down people's credit scores under the current system. It just highlights how tough it is to fit these new financial tools into the old ways of doing things, like credit scoring.
Who gets to control the data, essentially?
Exactly, and who benefits?
And it's not just about sharing data. Look at who's becoming a financial provider now, Wix, the website builder.
Yeah, I saw that.
They launched a whole financial suite for their merchants. Banking, credit lines, the works.
So blurring the lines between tech platforms and banks.
Totally. And then you've got Remitly. They're connecting Web3 crypto stuff with everyday money transfers. They now support cross-border payments using stablecoins.
Digital dollars, basically.
Yeah, making international transfers potentially faster or cheaper using crypto tech. The whole payment infrastructure is just morphing.
It really is shifting under our feet.
Okay, let's switch gears slightly to crypto itself. Coinbase had a pretty wild Q2.
Oh, yeah. Good wild or bad wild?
Both, kinda. They reported a huge profit, $1.4 billion, but a lot of that was from investment gains.
Like their stake in Circle, the stablecoin company?
Exactly. Circle's IPO plans boosted the value, but their actual revenue from transactions, that missed forecasts and even declined.
Because people weren't trading crypto as much. Spot trading slowdown?
Precisely. So mixed signals, right? Profit up, core business revenue down. Still, their stock is up over 50% this year.
Volatile space.
And they're aiming to become an everything exchange, whatever that fully means.
Well, I think the bigger picture here, beyond just Coinbase, shows two things. One, yes, the crypto market is still super dynamic, unpredictable even. But two, you see traditional finance getting more involved, seriously involved. Look at BlackRock.
The giant asset manager.
Yeah, they're committing up to $1 billion with LendingClub. They want exposure to high-yield consumer credit, basically personal loans.
$1 billion.
Wow. It shows this real blending of strategies. Big traditional players are now actively seeking returns in areas that were once considered alternative or niche, like consumer loans originated by a fintech platform.
So old money meeting new finance in a big way.
You got it. A deeper integration is happening.
Okay, so let's try and wrap this up. What's the big picture here?
Well, from Gen Z basically living financially online,
Right, to these huge strategic shifts by giants like MasterCard and BlackRock.
it's just crystal clear that finance is moving incredibly fast. Constant motion.
It really is fascinating to watch unfold.
And the trend seems to be towards our financial lives becoming even more, built into everything we do. More personalized, definitely more reliant on tech.
So for you listening, understanding this isn't just about, like, keeping up with the news.
No, it's more fundamental. It's about being prepared for how you'll actually interact with your money going forward, how you'll save, how you'll invest, how you navigate this increasingly connected system.
Knowledge is power, as they say.
Indeed. And maybe a final thought to leave with everyone. As finance gets more digital first, more embedded in everything, what new kinds of financial literacy do we really need to master?
That's a good question. What skills become most crucial?
Something to think about until next time.
Spoken Tech, for your ears.